Okay, so today is January 23rd. It's a Friday. This is my trade recap for Wednesday, the 21st. Um, so looking at the pre-market on Wednesday, we took out Asian session low and we created London session low beneath that Asian session low. Um, we were bearish on the 30 minute, right? I don't pay attention too much on the 30 minute, but the 4 hour, we were bearish coming in on Wednesday, and we were also bearish coming in on Wednesday on ES, right? Both indexes, we took out a lot of low resistance liquidity. We had the prior session day low taken out, right, which would be this low. And looking at the market on draws on liquidity, right, which would be take profits. On the sell side, the only low we have is this low all the way on December 17th. And after that, there's nothing that looks good or close that we could get. Scaling down to the 1 hour, we were bearish coming in, and we were also bearish coming in on Nasdaq. Paying attention to the 4 hour and 1 hour order flow, it's important, but it's not always necessary, because even though we were bearish on all the high time frame with the 1 hour and 4 hours, I ended up taking a long on the day and actually making money, and I'll get to my decision making on that soon, right? But scaling down to an even smaller time frame on the 15 minute, we can better see when market opened, and market opened right here, right on ES, and on Nasdaq it opened up right here. This is the candle that opened the market, right? So looking at the market open, we took out London high and Asian session high on Nasdaq, and on ES when market open we took out London session high and Asian session high, and we actually did that a little bit before market open at 9 o'clock. So looking at that, you might think maybe we're gonna take a short, right? Because on the higher time frames we're bearish. We took out all this buy side liquidity, so it would make sense for us to go short. And I was thinking about that a little bit. But looking at the 1 hour, right? We had this gap got filled and everything, so it looked pretty bearish for the day. But and also looking at the 15 minute, we took out this liquidity, but we also broke 15-minute structure to the upside, right? And I pay attention on the 5 minute. The 5 minute is when that's the time frame that I make my decision off of, because if you're day trading, you have to have a specific time frame you're day trading off of. Like you can't be looking at the market on the 45 minute, right, thinking about taking a trade and then going on the 3 minute, like you can't keep going all over the place. You have to have like a favorite time frame that you use that is consistent with profitability and everything. And for me, that's the 5 minute, right? Because what I'm doing is I'm trading breakouts, right? Breakouts are not happening 4 hours, right? They're usually happening in the morning at 9:30 when the market opens, and I'm in the trade, and I try and get out around like 11, 12 o'clock, right? Typically, I shouldn't and really never am in a trade after 1 o'clock, right? Whatever trade I took, if I took a trade on the ES or NQ, I'm pretty much never in a position after 1 o'clock. It either hits the stop loss or the take profit before 1 o'clock, right? So I'm not going to be looking at the 1 hour to make a trade that I'm going to be in for maybe 2 hours at most. That doesn't, so you have to go on the 5 minute. I like the 5 minute. So market opens, and I rate for the wait, that's actually 9:15. Market opened right here. My bad. Market opened right there. I actually had the thing at the wrong thing. Okay, so in the pre-market, a couple minutes before market opened at 9:30, we had the highs taken out. We did not take them after market opened. Okay, yeah. So in the pre-market, we took out those session highs. Um, But looking at the price action, we're bullish on the 5 minute as well as the 15 minute. We don't have an inverse of a fair value gap. We don't have 79% extension to the downside. We don't have a 5 minute break of structure, right? But what we do create is a bullish SMT, right? So we have this bullish SMT between the 920 low and the 940 low, right? ES makes a higher low compared to NASDAQ, which made a lower low. So we have a bullish SMT we were looking at, right? And another reason why I wouldn't be looking for shorts, because we're already bullish on the 5 minute. We have this bullish SMT. Another reason why you might not want to be looking for shorts is because the take profits for shorts aren't really good. All you had for take profit on the sell side is this London session low and maybe these other lows that are like 60, 60 points away, right? It's not super close. And then on ES, it's the same thing, right? And then past London low, all we get is this higher time frame low, which is way too far away. So that's another reason why I wasn't looking at a short, was purely because of the take profits are not really great. So that was my logic. And looking at the order flow and the SMT that we made, I wanted to take a long, right? And if you look at the take profits on the buy side, we have these two highs, which are made about like the same highs, right? So there's a lot of good liquidity right here. And then we had this high over here. And then looking at ES, it looked a little worse on ES. We had a few more highs on ES, but they were farther away and stuff, right? To get all of these highs are like 40 points. I mean, you could take a trade, you know, with 40 points in itself, right? And then these highs, they're only 12 points away, right? And this high is really two highs, because they made about the same high. But this one narrowly missed it. So there's a lot of sitting liquidity up here that you want to get. So going down on the 5 minute, I saw that and I'm like, awesome, I want to take a long. I have my 5 minute confirmation. We're bullish on the 5 minute. We have the SMT. So now I'm just basically looking for a retrace, right? So I have to wait a little bit before we get that retrace, and it wasn't anything I was crazy about. So looking at this, we don't get a retrace until 10 o'clock, right? On ES, and it's the same thing on NASDAQ. We don't get a 5 minute candle retrace until 10 o'clock, right? So now I'm looking at these gaps, right? These gaps are really good for a retrace. We had this 5 minute gap too, but I didn't mark it out because we didn't get into it. We got into this 5 minute gap, and then so once we get into this 5 minute gap, I go down on the 1 minute to look for a 1 minute confirmation back to the upside. Because if you're going to have a 5 minute retracement, typically on the 1 minute you've broke order flow to the opposite direction, right? So we have this retracement into this gap, and what do you see on the 1 minute? We broke structure to the downside, right? So now I'm gonna wait for a break of structure back to the upside, or a confirmation, right? So this is the 5 minute gap. This right here is an order block, right? So I marked this out as an order block. That this is on ES, and on NASDAQ, this is the 5 minute gap. We have the order block down here that we didn't get, right? I actually wanted to take a long position on NASDAQ because I thought the highs were better, but the reason why I ended up taking a long on ES was because I liked the retrace a little bit more, and also we got my 1 minute confirmation a little bit sooner, right? And we were also And on this 5 minute SMT that we completed when we took out that high, we were also the leading index, right? So it doesn't hurt, taking a long on this index, right? Because we were also the leading index down here. So it's safe to assume that you're still gonna get some pretty good price action, and, you know. But looking at this, we get a break of structure at 10:15, right? So on FX replay, which is what I'm doing the trade recap off of, this candle right here is a doji candle, but when I'm on Trade Locker, I don't know why it did this. It was actually different. It was not a doji. It was actually a retrace, like a down candle, right? So looking at this at this is ES, right? So at 10:14 on January 21st, we had this 1 minute down candle, but on FX replay it doesn't show up. It just shows a doji candle, right? But this was my 1 minute confirmation. We had that break of structure to the upside. So at 10:15 was when I entered, right? So you're looking right now. We did not break structure. We didn't break structure on FX replay because it's just wrong. But we did, right? So at 10:15, that's when I placed my trade, and I set my stop loss at this low, and then my take profit at the high. And the reason why I didn't have it at this high or this other high is because they were kind of far away. I'm looking at the price. We're kind of extended as it is when we place the trade, right? So if we're getting in right here, I mean, this trade has been going on for like 42 points as it is, right? Like we've had all this order flow. That in itself is a pretty big breakout. I don't want to be caught, in a trade and have it retrace and then hit my break even, right? So I didn't want to have my take profit past this high. I wanted it. I wanted to take a long on Nasdaq, right? But I saw the 1 minute confirmation much sooner on ES, which is why I took it, right? Sometimes when you're looking at the indexes and you're trying to make a decision on which one to place a trade off of, and if they're like really closely aligned, let's say you don't have an SMT, they're pretty similar in the setup, you just kind of take the trade off of whichever index gives you the entry the soonest. And for me, I got my 1 minute confirmation sooner on ES than I did on NQ, so I wasn't gonna miss that entry. So I'm like, okay, let me get in right here, right? And then on Nasdaq, we do get a big of structure at 10:14. So I could have took this too. Another reason why I didn't is because the retrace was kind of trash. Looking at the 5 minute, like we barely retrace. So I'm like, I don't want to take a trade on an index that I feel like didn't make a very good retracement, because then I feel like I put myself in a higher risk of being stopped out. If you look at ES, we do make a better retrace. We have this candle wick that touches down into the 1 minute order block, which I liked. Smart money is entering right there, so I felt pretty good with getting in on this candle on ES, right? You could have took a trade on Nasdaq at 10:14, right? It would have been a little bit risky, right? I think the take profits are really good, but because this retrace was kind of crap, it because I put my stop loss typically at the lows. If I'm taking a long, my stop loss is going to be at a low, right, where there's going to be low resistance liquidity. So that would be this price right here. This would be where my stop loss would be. This doesn't give you a whole lot of wiggle room. Like, it's kind of tight. I didn't like that. You look at ES, we have a bit more space, and I wanted that extra space because sometimes you can get stopped out of a winning trade, and then you unnecessarily lose money because you kept your stop loss too tight. So you don't want to put yourself in that position. So sometimes you have to risk the risk reward ratio and make it a little bit worse so you can bank on a good trade, right? And so there was no other place for me to put my stop loss outside of this low, right? I maybe could have put it under this 5 minute gap, maybe at this 5 minute low. So I mean, you could have done all those things. I don't typically take trades using that type of strategy or logic, but you could have done it and you could have made money, right? Sometimes, as people trade, they can change their trading strategy, tweak it a little bit, right? So it can make a big difference with profitability, just changing a few small things. But this trade wasn't bad. It was a 2.45 risk reward ratio. So that's pretty good. Pretty good risk. And as you can see, we hit take profit, and we also hit all those take profits on Nasdaq, right? So pretty good trading day. Um, so yeah, and I don't think we hit these highs. We might, but I don't know. Yeah, we don't. So that's the other thing, right? I had a feeling if I put my take profit at this high, it might miss it, right? Because I've seen with the back testing, you can look like the price can be really close to some good draws on liquidity, but it'll miss it. And if you look at the breakout, it really started at 9 o'clock. This breakout started in the pre-market, right? So my trade that I took was a continuation of the trend. I mean, this is a big move, 1.5% on Nasdaq, right? And on ES, it's like 1.2%. So, I mean, getting in the position while you're already like in the premium price range of the breakout and trying to expect it to go up even more, it's kind of greedy, right? You can bank a 2.45 risk reward ratio right here. Why are you gonna unnecessarily risk going up here? Because even though you could get more money, you also take the risk of potentially missing it and getting break even on the trade, and you don't want to do that, right? So that's the reason why I had my take profit right there. On Nasdaq, it's a little bit different. You have this high really close to these ones, and that I mean is much more better, right? Much more logical to put your take profit at this high instead of this one. These are only like 11 points away. It's just common sense, right? So that's why I made that decision. So pretty good trading day. Um, yeah. So that's the logic that went behind the trades. And we actually do take out those highs. But if you're wondering what caused this, that was because Trump announced a deal with Greenland, and then the market bull ran. So this order flow is based off of news. So don't expect yourself trading anything like this, right? Unless your strategy depends on news, like you're a news trader or something. But I don't do stuff like that. So yeah, that was a trade I took on the 21st. On the 22nd, I did not place a trade, but on Friday, which is today that I'm filming this, I do place a trade. I actually placed two trades, and I'll get into them later. I actually made money today. It's kind of interesting, right? So that'll be a good trade recap that I'll post later. But hopefully you learned something. Uh, Really, the thing about being profitable with day trading is really patience and discipline, right? You don't want to get too greedy. You have to kind of stay humble, and you kind of have to just be strategic. So yeah. But I'll see you guys in the next one.